What is up, YouTube? Welcome to Universal Strength, where we transcend today for better tomorrows. In today's video, I want to take the time to talk to you about ISO 20022 and how this payment infrastructure is going to make cash trash. So obviously this statement, cash is trash, is not going to be happening overnight. It's probably going to take 10 years before we see cash just completely disappear from the market. But currently we are operating off of what's called the SWIFT network. This is the global provider of secure financial messaging services. Basically, this is the individual, or this group is the individuals that deal with everyday transactions. So whenever you go get yourself a coffee and you pay at the little Posy system, or whether maybe you're even doing a cross-border situation where maybe you've traveled halfway across the world and you're having to make a bank transfer from one currency to another, basically the SWIFT network is going to be responsible to make that all happen. So what is ISO 20022 and how is it relatable to cash becoming trash? So basically this is a payment rail infrastructure change where they are going to be incorporating distributed ledger technology, smart contracts, and this change alone will basically set up the ability for interoperability with cryptocurrencies in and around the world that are ISO 20022 compliant. Now, some people would say that what's stopping SWIFT or the central banks or the Federal Reserve from creating their own cryptocurrencies? Essentially, they have never been able to be successful controlling the monopoly of that sort of infrastructure without the private sector. Allowing the private sector to flourish allows for them to grow in many different ways much quicker than they would if it was all very, very rigid and structuralized with one body. So what some of these cryptocurrencies that are ISO 20022 compliant are Ripple XRP, Stellar XLM, XDC, Quant, and Algorand. Now, in no way is this financial advice. I want you guys to do your own research. It's kind of why I'm leaving this a little bit vague, because I just want to spark a little bit of interest within you, and hopefully you go off and do your own market research. So with ISO 20022, I'm going to just show a little simple video just sort of talking about ISO 20022 and sort of how SWIFT is going to go about operating. And by the way, I'm probably going to interrupt a lot just because I don't want this video to get flagged, and I would like to be able to continue with this video.
Payments and correspondent banking. And corporate customers are set to benefit thanks to the advanced reconciliation and treasury opportunities the new standard makes possible. Let's take an example. Coffee Co. is a boutique importer, roaster, and distributor of coffee beans based in London. Coffee Co.'s supplier in Indonesia has asked to be paid in US dollars to its local account. Coffee Co. is happy to do this, and to make life easier, has agreed with its supplier to aggregate multiple invoices into a single payment. The batch of invoices to be paid includes one invoice that is not correct and needs adjustment, and a credit note from a previous transaction that needs to be reconciled. Coffee Co. would like to present all this information in a single instruction, with a single payment setting the entire net amount outstanding. Using today's MT standard, they would not be able to do that. There is not enough room in the remittance field to describe all that is needed in a structured way that can be automatically processed. With an ISO 20022 based instruction, though Coffee Co. can pay all outstanding invoices, apply a credit note and contest a line item on an invoice. A single payment can describe multiple rich and structured elements, including dedicated fields, to differentiate between commercial invoices, credit notes, and invoices that need adjustment. Declare local purpose codes required to report to the Indonesian regulator. Uniquely identify invoices in the buyer's ERP for easier reconciliation. And, in cases of dispute, the amount to be adjusted and reason for adjustment. All parties in the payment chain know exactly what is being paid and settled, and there is no need for a single phone call or email. All this information.
So essentially what they broke down there are just the smart contracts and how they're going to be coded in order to be able to allow for transactions to happen in a very complicated way. Ethereum and Cardano are great examples of blockchains that operate off of smart contract technology that would allow for an individual to create their own. It's almost like if I was to oversimplify smart contracts, they're essentially a yes and no questionnaire. So it's like if yes, then this happens, and if no, then this happens. And until the criteria is met in the yes and no scenarios, the transactions can't go through. If you can imagine one day, this is even bigger than just businesses. When you think about it as an individual, there will become a time where your house will be on a smart contract. Everything that you own might even be on a smart contract, and it will be very easy for you to make transactional shifts and changes of those assets or commodities based upon what smart contract is associated to that asset. For once again, the real estate industry is a great example as to where you could have a smart contract that essentially takes the place of the lawyer and the real estate agent, and you would just be able to make these transactions with yourself and say a home buyer or a friend, or maybe you're just at a party one night and you want to bet your house away. It will become very evident very soon just how much these smart contracts are going to change the world. And why cash will ultimately be trash is mainly because when you will be dealing with these smart contracts in ISO 2002 compliancy, you will no longer be dealing necessarily with no longer be dealing with a private bank, but you will be dealing with a federal chartered bank, and it will be a bank that even though on the surface of things, you might still go, some people will still go into a bank and do the old traditional way of banking. But what's really happened on the surface of things is that you're actually dealing directly with the Federal Reserve or the Crown. Whereas right now, we as consumers have no connection whatsoever outside of our banking infrastructure to deal with the Federal Reserve, right? And it's kind of we're sort of in the hands of our bank and its ability to orchestrate trade deals for us, which in the future that may not be the case. So anyway, let's get back to this video real quick. Went on a bit of a tangent.
Can be reconciled and immediately posted to CoffeeCo and its suppliers' ERP system, significantly driving supply chain and working capital efficiency. Corporates are ready, and with the adoption of ISO 20022 in correspondent banking and all major reserve currencies, end-to-end payments will be rich and structured, enabling the next generation of treasury services and a new era for corporate payments. ISO 20022. Quality data means quality payments.
All right. So hopefully that kind of clears up a little bit of what a smart contract is, or what this particular payment rail is all about. And essentially, I just want to kind of highlight right here just that, this ISO 2022 compliancy, it is actually a distributed ledger technology and smart contract platform, and the application programming interface, or API. This essentially is just gonna hopefully point you into a direction and just allow you to see that cryptocurrencies are not going to be disappearing. I think that regulatory clarity is well along its way. That we've got the Ripple court case right now. We've got Jerome Powell talking about how they're planning to create regulatory clarity in and around cryptocurrency. I really, really, really do not believe that cryptocurrencies is going to disappear overnight. That being said, I do think that some cryptocurrencies that don't follow regulatory clarity, that don't solve real world problems, will be disappearing. And it's just important that if you do decide to invest into any cryptocurrency, that they solve real world utility, that they are actually creating, they're solving a problem in our day-to-day lives, and that they are almost chosen in a sense by certain organizations and partnerships that are really large. World Economic Forum is a great place to look for cryptocurrencies that are sort of supported by them. You've got partnerships with certain big banks that are huge, like Quant, for example. Once again, I don't want to give too many. I don't want people to mistake what I'm talking about as financial advice, and in no way am I encouraging people to buy these crypto coins. I'm just trying to point people into a direction of personal education, and that's ultimately what this entire video is all about. I just want you as an individual to make your own damn decision, and if it's something that you can see that this might be a really big ordeal, the greatest financial shift of all time might be taking place, and you could potentially be a part of it, I would just like to give people that opportunity. So anyway, that is ISO 2022, oversimplified for sure. I mean, I'm also, it'd be really difficult, I think, to try to explain this in a very intellectual way. And I don't really think that a lot of people would be taking in that information, just to hit you with all the ins and outs of ISO 20022. I think that would be really hard to listen to and really hard to absorb. And so I just really want to take these bite-sized amounts of information and just give you an opportunity to sort of dig into it a little bit on your own. Anyway, that concludes the video today. If you guys have any questions about ISO 20022, feel free to leave a comment down below, and if you like the video, smash the like button. Really gonna help this channel grow. Anyway, take care, guys.